This video brought to you by Forex Internals.
Hi, and welcome to the FX Internals multi-timeframe indicator demonstration. Today we'll be showing you what FXI multi-timeframe indicator looks like and what its settings are and how to read it. However, before we start, I just want to give you guys a heads up that in order to use this indicator, because it uses internal measurements and measures the strength of a currency across multiple other currencies, we need to have data for those other currencies. To do that, you need to load up the 1 minute charts for the Aussie dollar, Euro dollar, Pound dollar, New Zealand dollar, dollar Swiss, dollar CAD, and dollar yen. So once you've loaded those charts up and made sure they're set to 1 minute bar sizes, you can then load the multi-time frame indicator. What the multi-time frame indicator does is it presents a very small 3-bar histogram of the internal strength of a currency. It measures the one currency's strength against every other currency of a pair versus the other currency's strength against every other currency of the pair. So in this case, we'll be doing it on the euro dollar. So we will measure the euro's strength against every currency and compare that to the dollar's strength against every currency. The reason why it's called multi-time frame is because we can look at the 1 minute, 5 minute, 15 minute, and 1 hour strength movements over the last 3 periods and see how things are doing in the upper time frame compared to how they're doing in the lower time frame. Why don't we go through the settings and then you can take a look and we can talk about how to examine them and understand what we see. So you just drag multi-time frame onto the chart. And the input tab usually comes up. We'll go to common and make sure that allow DLL imports is checked because all of our indicators and trading tools require allow DLL imports to work. Then we'll go to inputs. Time frame def just is the acceptable inputs for all of the time frame settings, time frame 1 through time frame 5. We can display up to 5 histograms depending on how, 5 time periods depending on how big your screen is. 0 is off. And then you can specify what time frame you want to look at. So we're going to turn one of them off just because our screen isn't the largest in the world. And then we'll look at, say, we're looking at a 15-minute chart here. So we'll look at the 1 minute, the 5 minute, the 15 minute, and the 60 minute time frame. So we can see both time frames below our current chart's time frame and time frames above our current chart's time frame. Scroll down and look at some of these other settings. Periods is the number of periods back that we will use to calculate the rate of change under standard settings. In this case, it's 14. If we set this to 1, rock type of 1, the rate of change type usually is 0, which means use a standard rate of change algorithm and look for the number of periods back. If it's 1, it means that we're looking for the acceleration of the move by comparing one shorter time frames period to another period. So in this case, we're looking at the 5 period back rate of change for each of the time frames versus the 13 period back rate of change for each of the time frames. So for the 1 minute histogram, we'll look at 5 minutes back and 13 minutes back. For the 1 hour rate of change histogram, we'll be looking at the 5 hour back and the 13 hour back rate of change. I'll go through what this really looks like once we get all the settings set. We can smooth the information that we get back to remove some of the noise. We're going to use a EMA, which is a setting of 1. The definition of all of the settings that are valid is in smoothing type def. We will smooth them 3 periods just to remove a little bit of that noise. Actually, let's just make it 1, and so you can see maybe a little bit of noise. Price type is the actual price that we will be doing the calculations on. In this case, we tend to use a price type of 5, which is the typical price. The typical price is the high plus the low plus the close all divided by 3. Just have a few more settings down here. The calc type def is either a 0 being the linear sum of the strength or a 1 being the average. What this means is that we can either take the sum of the euro's strength against the Australian dollar, the the pound, the New Zealand dollar, etc., and just add them up and we get a large number. Or we can take the average by adding them up and then dividing by the number of currencies that we're comparing to get an average number. I prefer 0 to get the linear sum, especially on the smaller time frames where you're measuring 0.1% of change, and it's harder to read. And then we can set the various colors of things: the border color, the text color, the color of up and down, things like that. Red and green for up currency and down currency, and black I've set for the texts, so it's easy to read. And then we've buried a setting down here all the way at the end, calc current pair for the internals measurement. We've set that to false because when we're measuring the euro's strength, we don't want to include its strength against the euro dollar because that's the currency that we want to trade. So we want to see what the strength of the euro is versus everything but the dollar. And we remove the euro dollar from our calculation by setting calc current pair to false. So let's just hit OK and take a look at what that looks like. And you notice that right down here we have the 4 histograms, and you can see here that on a 1-minute basis there's very, very, very little difference that's been going on. On a 5-minute basis we're starting to open up. On a 15-minute basis, however, you're starting to be able to have some readings as to what the differences look like. Actually, let's just change a quick setting here and go from the acceleration, which is the instant velocity, and we're going to just make that a standard EMA, and maybe some of the differences will come out a little more clearly. Yeah, it's right up here. Make that rate of change as 0, just a standard rate of change instead of the acceleration of the rate of change. Close that. Yeah, and we can see things a little more clearly here, mainly because when the market turns flat like it has over here, there is no real acceleration for us to look at. So now we can only look at sort of rates of change. Let's look at the 5-minute period here. So here you can see that we're looking at the 5-minute, 14 periods back, taking the exponential moving average over one period and doing a price type of typical price using the sum method. The -1% and +1% is the min-max range of rate of change that we're looking at. And you can see here that there are 3 bars for each the euro, 3 bars for the dollar, and 3 bars for the difference. And what you're seeing here is that over the last 3 bars, the 3 5-minute bars, the euro has turned from negative to positive. However, the dollar has remained strong, dipping a little bit and then slightly coming up. The net result being that the internal strength of the euro is turning from a low to sort of a higher low. It hasn't quite reached positive, but it is getting there. So you can see the internal strength of a currency versus its difference. So here the euro is strong, the dollar is stronger, which means the euro should be falling. And as we've seen here, that is exactly the case. You can see that's also mirrored in the 15-minute time period here. However, over the 15 minutes, the euro seems a little stronger than it does over the last 5 minutes. And again, that's reflected here as things have fallen. However, given that the 15-minute seems to be sort of strengthening a little bit and the hour is still positive, this doesn't look like a collapse in the currency is imminent, but I would wait for a little clearer signs on the upper time frame to get a better reading on the internal strength or weakness of the currency. That concludes our demonstration. I hope that helps explain how multi-timeframe works. We would suggest that you go to www.fxinternals.com to take a look at other videos about our other indicators. And as always, we wish you the best of luck in trading.